Welcome back. I hope you guys are ready to spend some time today really getting into the details. We've been spending a lot of time gathering information, and it's nice when it all starts to come together and we start, trying to make a difference in your life. And so today we have for you the prepared financial plan that's going to lay the framework for all the work that we're going to do over time. And so this is a process that's going to take a number of months, and so it'll be neat to watch it all come together and watch your world change. And so I just wanted to start by highlighting some of the good things you have going on. You guys have a healthy saving rate of around 16%, and that doesn't even include your retirement savings. And then you guys have adequate savings for retirement and very low debt levels and good insurance coverage for your current needs. And so some opportunities that we can work through lie in your estate planning. There's some things we can do with Lake Enterprise as you near or approach the decision to sell, and then also setting up some revocable or living trusts. Additionally, is one of the goals you mentioned is setting up or education planning for Mary. I have some small recommendations to make for your property and casualty insurance, nothing big. And then I also want to talk to you guys about all that excess cash you have sitting around and see if there's any opportunities to get that invested. But we'll get there and we'll see what you guys are comfortable with. So with the ultimate sale of Lake Enterprise, your world is going to increase in complexity significantly, and it's important that we lay a foundation to make this transition easy and more efficient for you. And so this might seem overwhelming at first, so hopefully together we can take off small bites at a time. So if you guys are okay with it, I'd like to dive right into that Lake Enterprise, because ultimately it determines your asset base, which helps us derive your spending in retirement, your insurance needs, and so it's just a really good place to start. Mark, you requested that we use last year's earnings as a basis for the valuation of the company, which is known as the capitalized earning method. And so that method is a simple model for valuing companies and its outstanding stock. But note that this method has its faults, and that I really recommend that we work with an appraiser to find the true value. And that's going to become more important as we talk through some of the other opportunities you may have as you look to sell the company. And so using that method, we calculated an estimated company value of about $2.9 million. And that is before tax. But so after you account for the short-term debt on the company and taxes, that number comes to about $2.2 million, which isn't too bad. And so with that number, it puts you in a really good spot. Your spending is very reasonable, and you have a lot of retirement savings already in your world. And so when you look over the long term, that money is going to grow, and you have an increasing chance of having an estate tax problem, which is a good problem to have. And so ways we can reduce that while still transferring the assets effectively to your descendants, your children, is to really leverage the Lake Family Limited Partnership and the Lake Family Irrevocable Trust. And how you could do that would be contributing or transferring a minority share of your Lake Enterprise stock into the Lake Family Limited Partnership. So for this analysis, we'll say you're going to gift a third of your stock to the Family Limited Partnership. So the advantage comes into play that the shares go into the Lake Family Limited Partnership, and then you're going to gift the limited partnership shares to your family by moving them to the Lake Family Irrevocable Trust. And so, as you mentioned, assets that are the limited partnership shares of the Lake Family Limited Partnership receive a 35% discount due to their lack of marketability. So you can ultimately transfer a third of the Lake family enterprise, which is around $900,000, and only have to pay gift tax on $585,000, which means you can transfer $315,000 of the company without having to claim it as a gift. So this strategy becomes even more powerful after you sell the company, because the Lake Family Irrevocable Trust was set up as an intentionally defective irrevocable trust. So the grantor, which is Mark, ends up paying the tax incurred within the trust. So of the $901,000 of the company now in the irrevocable trust, has maintained Mark's basis in the shares, gets taxed back to Mark. It flows through to his return at his rates. So we estimate taxes or long-term capital gains at around $180,000. So now you have gifted $901,000 to your kids, or $901,000 worth of company stock. Only have to claim $585,000 of it on your gift tax return or towards your lifetime exclusion. Then you also have the power of being able to pay the taxes on that of $180,000, and that is not considered a gift because of the way it was set up. So I want to briefly go into some other estate planning stuff that coincides with this, and it's how you guys set your world up for your protection to help the flow of assets upon your death go better. And that's just making some changes to your estate planning and your current wills. And so currently you have individual wills that directs the assets to be transferred into a QTIP, or Qualified Terminal Interest Property Trust. So the surviving spouse can use the assets during their lifetime, and then the rest of it goes to your children. And so the biggest disadvantage of this is that your assets have to go through the probate process. And if you were to move your assets and transfer them into living trusts, also known as revocable trusts, and then modify your will to what we call a pour-over will, you will avoid this probate process. So you might be asking, like, what is a living trust, and how will it change our life? Well, similar to a will, a living trust is a written legal document that provides instructions for distributing your assets at death. But the key difference between a living trust and a will is that the living trust actually holds your assets. And so you still have full control over these assets. You can add them, you can take them out, but they are not subject to the probate when you die. Your revocable trust completely directs those assets and how they move how they transfer after your death. The main reason why we want to avoid probate is that it's a long and costly and public process, and it tends to be hard on family members. And when these living trusts are set up, the assets, it's assigned a trustee, and the trustee just has the power to direct the assets where you intend them to go quickly. And so so we can also discuss this if you would like to work with an attorney to draft the sale of moving the shares of Lake Enterprise into the Family Limited Partnership and then into the Family Irrevocable Trust. So we can open up the discussion on what you think about that first planning topic, and talk about your desire to go ahead and meet with an attorney and really start talking about your options.